Hello people, welcome back to the channel. Today we're gonna talk about launching a crypto fund in a crash, and actually how we launched our crypto fund just a few months ago. We raised over $10 million again during a crash. And so I wanna walk you guys through how we did this, how we put this together, how we use a certain formula to find investors, get them to commit, put money in when the markets are falling right crazy. And if you don't run a crypto fund, that's fine, but this is the same for private equity, for hedge funds, for venture capital, for real estate funds. I have a lot of people in my group program right now asking, how do we raise money in the current marketplace? Markets down 30, 40, some cases 50, 60, 70% in crypto. How do you convince investors to get in this asset class, to be bullish and trust you with their dollars, especially on a first time fund? So with that, I want to dive into today's episode. Now with that, I want to brag a little bit. We launched June 1st, our fund, with right around $10 million. And as our August 15th reports, which is our most recent report, Ugly Unicorn is up 3.48% positive, while Bitcoin for the same period was down about 24.86%. So yeah, we feel pretty good about that. And I think because of that, this number has climbed quite a bit. I don't know what the final count is as of today, but our goal is to raise $100 million over the next 12 months for this fund. So yes, we're continually capital raising. If you guys want to learn more, go to uglyunicorn.com. Now I promise to be honest and show you the good, the bad, and ugly of everything about launching this fund. I want to get into the nitty gritty. I want to be clear though as well. We've raised over $10 million for this fund during a crash. We had soft and verbal commitments for around $36 million going into this year. So earlier this year, we followed the fund launch formula, which I'm going to get into in a minute. It's a 4-step formula. We followed it, had $36 million lined up. We're feeling really good. Crash hits, money's falling, and we ended up only with 10 million, just to make sure you guys are clear. We had a lot of investors either decommit, say, I've got real estate projects, I've got other stuff I'm tied up with, or, hey, Bridger, I was going to invest $1 million, and now, you know what? I'm going to invest $250,000. I took a little haircut. I'm going to pull back a little bit on my investment. When you're launching your fund, you should expect this, okay? Expect a pullback, and this is regardless of the markets. Usually, in my opinion, you usually end up with 60 to 50% of your verbal commitments actually turn into dollars in your fund. For us, it was less than a third, I think, catalyst with a huge crash in the markets. I mean, Bitcoin, biggest drop, was down 70%. So some of these people that had huge crypto holdings were like, man, I don't like this asset class anymore, or I still like it, I just don't have as much capital to deploy anymore. I took a big loss already, so let's move money in. So I want to talk about this formation and launch of our fund using the fund launch format here. Now, a lot of you guys know I run a company called Fund Launch. We have over 20,000 students that we've helped get started in the fund game. We've got a number of funds near over $100 million, one over $1 billion in their management. And then we have 26 funds over $10 million we've helped launch in private equity, venture capital, real estate funds, every type of fund you can imagine. We've helped people launch those types of funds with our company. We have live events, coaching, all that kind of fun stuff. And this is exactly the process that we teach our students. It's called the Fund Launch Formula. The way we've developed this formula was because I went and interviewed dozens of amazing fund managers that were managing hundreds of millions and billions of dollars. And it was funny, I asked them their startup story when we were launching this. They all gave me answers that followed into the fund launch formula. And again, these aren't people that were in the lucky sperm club. These are people that actually were entrepreneurs, went out and launched their fund. Now, when we coach somebody, when they join our group, the first question we always get is,
Bridger, when can I talk to a lawyer? I want to meet with a lawyer. I want to do my legal work. Let's get the docs going. Let's get set up.
and I always say, hold on. That is actually the last step of this formula is legal, okay? And you're surprised by that. Most people want to do legal first. They want to say, let's get the lawyers, then let's go raise capital, then let's figure it all out, and let's go launch this fund. Often enough, if you do legal first, you will pay $30,000 to start legal. You'll then come do step 1, 2, 3, and 4 and iterate and go back and forth and fix it and go back, and you end up spending $50,000 to $70,000 on a legal, and sometimes you never even launch your fund because you didn't follow the first 3 steps of the fund launch formula. Okay. That is why a lot of funds fail and people lose a lot of money. So we tell people, hold on, before you do legal, step 1, okay? Come in and we are going to find incredible deals. And by deals, I'm going to put that in quote. Let's figure out your thesis first and let's vet your thesis. Your thesis is just a fancy word for your plan on how you're going to make money in your fund. Let's run test portfolios. That's what we did with our crypto fund. Let's go find real estate deals that look good or private equity deals that you would invest into. Now, once you found a good deal or have good thesis behind you, let's move to step number 2 and test out that thesis inside of a frame. So what we're gonna do is frame out your fund. This helped me drastically. What kind of fees are you gonna charge? How are you gonna do a waterfall distribution? How are you gonna structure your fund? How are investors gonna join? When can they leave? When can they join? Is it open-ended? Is it a closed-ended fund? Is it an American waterfall, a European waterfall? And by the way, if you don't know the stuff I'm talking about, we have other videos on this channel that explain all of this in our course and our program. We go through all this and build this with you. And guess what as well? These are the same questions your lawyer is gonna ask you as well. However, your lawyer is gonna charge you $800 an hour, and they're gonna talk very slow and methodical because they get billed by the hour. You do not want your lawyer to also be your teacher because it's a very ineffective way to learn about funds. Whenever I get a fund set up, I go into my lawyer's office, I say, hey, I want XYZ with a drink and a side of fries. I know exactly what I want. It saves my lawyer a lot of time, hence saving me a lot of money, and my fund gets set up exactly how I want for my investors. So back to step number 2, you build this all out down to a pitch deck. And inside of our group, this is what we help people do. We help you build your pitch deck. And this is what we did for our Ugly Unicorn Crypto Fund. We ran a test portfolio over here. We then built out our waterfall, our structure. We went through it and we put it all down into a pitch deck, which led us to step number 3, go out and get capital commitments. Go raise some money. Now, you're gonna do this a couple different times. At the beginning, you're gonna do what I like to call a soft raise. You're gonna go out and float this pitch deck around to people to see what they think. Do you like our fees? Do you like our waterfall? Do you like our structure? Do you like our team? Do we have enough experience for you? Do you want to invest? Oh, you don't want to invest. Why don't you want to invest? You get market feedback and market testing on your fund. Inside of our group, we want all of our funds to soft raise at least $3 million before they go to legal. Now, by soft raise, I literally mean verbal interest or verbal commitments. The way I would pitch somebody, say, hey, this is not official yet. Can I run this by you? I want to get your advice. And I give them my full pitch. I give them the pitch and everything. Hey, this actually might be a fund. If it was a fund, would you invest? Yes or no? If they say yes, I say great. Are there any things that we could build upon or make it better for you? And if they say no, well, that just starts the conversation. Well, why not? What would hold you back from investing? What's the biggest thing that would stop you from putting dollars in today? Maybe you don't have a strong enough team. Maybe your fees are too expensive. Maybe your structure, maybe your test portfolio didn't perform well enough. And what you do is you come back and iterate back to step number 1, and you come all the way through to step number 3. And you do this big circle, step 1, 2, and 3. This is why the fund launch formula is so amazing, because you don't waste any money. All you waste is a little bit of time, and that time is well spent because you'd have to spend it anyways. Once you do this iteration a few times, step 1 to 2 to 3, then and only then you come to step 4 and go to legal. So it literally last year, me and Dan Young, my partner, started out with a test portfolio. We started testing things out. We then went and built our team. We actually had a bunch of team members. There was a couple team members we tested out with our test portfolios and we didn't like them. They didn't perform well. They just didn't do well managing a fund. Well, thank goodness it was in a test portfolio, not our real portfolio. So we actually let a few people go and said, hey, you're not involved with us anymore. We refined our team. We refined our fee structure based on what our investors were telling us. And then we had soft raised quite a bit of money. And then we said, hey, let's actually do this. So we called up a lawyer. I said, okay, I know exactly what I want. We want a European waterfall. We want a 2 and 20 model. We want to be in these states. We want to have this type of structure. Our lawyers went and built this fund for us for actually, I think, very cheap. It was around $15,000, which by the way is reimbursable expense from the fund. They were able to launch this fund very quickly legally because we knew what we wanted. We then go back to our investors earlier this year and got hard commitments from our investors, meaning we then come and formally pitch them again. We have an LPA, PPM, our documents to sign for them to fill out and say, hey, how much money do you want to put in our fund? We grabbed all those documents. We gave deadlines. We said, okay, by June 1st, all of our money's got to be, you got to wire all your money in by June 1st. So we issued capital calls. We did all of our compliance checks, filed our Blue Sky filings, our Form ADV, our Form D, all that kind of stuff. And then checks started rolling in. And this is, by the way, this is the time when people started saying, well, hey, I was going to put in $1 million. Now I'm putting in 250. Okay. I was going to put in some money. I'm going to put a little bit less in because during this time period, this is June of 2021, markets were collapsing. From January to June, we saw a huge dip in the crypto markets. I think it was over 40% we saw in the crypto markets. Broad market was selling off as well. I think it was 15% sell off to 20%. So people were taking haircuts right here. Rates are rising. So people obviously want to tighten their belt, but still we grabbed quite a bit of money. This whole month of May leading up to June, we were calling investors, going back and forth, making sure documents are signed correctly. We have a lot of documents, a lot of compliances. You're doing KYC, AML checks, making sure your investors can actually come into the fund correctly. We used a third-party admin to help us with all that, which I highly recommend using. And ta-da! We launched our fund June 1st, a full-out hedge fund, and we started moving money into the markets. Now, like I said earlier, since June 1st, again, Bitcoin's down 24%. So Bitcoin kept falling. Our fund actually has remained positive. We're up 3.48% for the same period, now reporting on August 15th. And because of that, investors now have put more money in. We are an open-ended fund, so new investors can actually put more money in at the end of every month. So we have new investors that want to put more money in, or current investors want to add more. So this number of 10 million is now raised. I don't know what the exact number is as of today, but we've jumped quite a few $1 million since then. We keep adding more millions every single month almost, and it's done very, very well. Again, with the goal of having $100 million fund. Now on step 3, right? Raising capital. How did we go about this during a market crash? First thing, as much as we like to think that we go off spreadsheets and that we're such great investors and we always buy the dip, most people invest with their emotions. And even your big time investors still are emotional about markets. You've got to re-emphasize what crypto can do, what blockchain technology is doing. Now the price will go up and down and fluctuate. And right now is a fantastic time to buy. You are buying the dip. If you believed in crypto before, you better believe in crypto now, because 1 in 4 developers are moving this industry. The industry's still growing with technology and all that stuff. Yeah, the price is down, but the future is really bright, right? You got to get people back in the mindset of, yes, oh yeah, buy the dip, get in when it's low. Yes, I'm supposed to invest at this time. So number 1, you got to spend more time during your pitch helping people across that hurdle. Number 2, tax loss harvesting. We tell people, hey, if you've lost some money in crypto, great. Just talk to your CPA, but do a thing called tax loss harvesting. You can actually sell your crypto and take a loss. It helps you on your taxes, and then move it into our fund, okay? Or sell out your portfolio wherever you're at and move into our fund and get a tax advantage. It's another way to hit people. But I think most important is just showing your excitement, enthusiasm about the market. You couldn't just say, man, we've been waiting for years. This is a fantastic time to get into the market right now. It's funny. I talked to a few mentors that launched real estate funds back in 2008, 9, and 10. And it was funny. They had a very hard time raising capital. And people would tell them, oh man, I heard you're in real estate. I'm so sorry, and sorry for your loss. And they said, no, this is the best time to be in real estate. If you could pick the last 100 years, there's never a better time to be in real estate than 2009, 2010. This is the time to be in. And when people see your enthusiasm, your shock of this is an opportunity, people follow that. Again, it's emotional. Investing is emotional. If you show that enthusiasm of this is where we're going, this is where we're at, this is our plan, this is our market structure, this is our team, it helps a lot when you're raising capital. Now, in my experience, this is my 3rd fund I've launched. We've helped dozens of people launch their funds. The hardest part about all this, at least at the beginning, is actually launching. I say that with a grain of salt. Obviously, running a fund, managing it, there's a lot that goes in there. But people always ask me, like, when setting up, is it raising capital? Is it putting it together? Literally just pushing your team to launch with all those factors, whether it's raising capital, legal, docs, compliance, all of it together. You can delay this for years. I see a lot of funds that delay for 1 to 3 years to launch because it's just a lot of work and time and effort and energy. And it's a lot to learn beyond what we teach at Fund Launch. No one teaches this online. So you're like, what does a European waterfall mean, or a American waterfall, or a NAV? What does all this mean? And sometimes you just delay and you delay and you delay. If I could give anybody any advice, launch. Spend the time, spend the money, get coaching, get help, buy a course, and go through and just get all your things set up. Follow the fund launch formula right here. Do step 1, do step 2, do step 3, get verbal commitments, get iterations, fix your pitch deck, fix your team, get it across the finish line, set a deadline. We set a deadline June 1st, money's in, and you got to get in or, get off the pot, right? And we got money in and moved. And now once it's running, then there's, you have other things that come up of managing and making sure you're making good investments. But if I could say anything with launching and helping people launch fund, we run a company called Fund Launch. Launch, okay? Go out and launch, launching and moving. And that's true with all businesses, especially funds, launching, and have a launch date. Be an execution type of person. We're going to execute on our plan and get things done. If I could say anything to anybody, push through all this stuff. Again, if you want to see other videos, we have videos more in depth on the fund launch formula, on capital raising, on fund structure, all on our channel. You guys can look above and on the side of this video. But y'all are amazing. Thank you so much. Let me know what you think of this video. Like, comment, subscribe, all that crap. You guys are awesome. See you on the next video. Bye.